Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Also, please subscribe to our YouTube channel. We have tons of great stock videos and Tesla videos, so please subscribe. We would really appreciate your support. Okay, today we're going to talk about NIO. It's a electric car maker that's located in China. People call it the Tesla of China. There's been a lot of news developments tonight after the bell because the company reported earnings. So we're going to go through some of those and talk about the company as a whole. And I'll also give you my take about why I'm worried about NIO. Okay, so here are NIO's deliveries for last year, for 2018. In Q3, they produced about 4,000 of their ES8 cars, and they delivered 3,200. And in Q4, they produced 8,000 and delivered around 8,000 as well, which is huge growth. They only started, I believe, around June, so the ramp up was actually very quick. And this was even faster than Tesla's ramp up in this short period of time. Now let's just have a quick look at their income statement. I just wanted to highlight these two lines over here for total revenues. They made, okay, so these numbers are in Chinese yuan, and to convert it, it's about 6.7, you divide by 6.7 to get it into US dollars. So it's about $500 million that they made in revenues, but after all their expenses, they also lost about $500 million, a little bit more than their actual revenue. Now, down here they say that their full year revenue was about 720 million for 2018. Their gross margin for the full year was actually negative 5.2%. That means they're losing money basically on each car that they produce. And then they say vehicle sales accounted for 98% of their total revenues, and the vehicle margin was negative 1.6% for the year. So, I mean, the loss is expected for this company. They are ramping up. They're in startup mode. They are a startup company, and they just recently started producing their cars, so you would expect losses. A similar company like Tesla also had gigantic losses as they were ramping up production. However, the company's sales in January were only 1,800, and in February they were 811. That's units of cars. So that's compared to 8,000 units for the full quarter of Q4 last year. So obviously they're not going to hit anywhere close to that in Q1 of this year. And they've also canceled their Shanghai manufacturing plant, which I guess they had to deal with the government to produce more cars. And they're going to be canceling that, which is going to perhaps slow their growth down. After the company reported, they said that they're seeing a greater than anticipated slowdown in monthly deliveries, and they're probably not going to hit the initial estimates. Now, the stock was down 17% after hours. To be fair, it's been up gigantically. It's been up about 50% in the last 3 months. Even Andrew Left said he sold the stock, which is kind of interesting because he sold it just a couple days. He sold it at the end of February. So it seems like he made the exact opposite trade in Tesla, where he was short the stock and covered right before earnings when Tesla had actually very positive earnings that quarter. And in NIO, it seems like he was long and then sold all of his shares right before the company reported their earnings. Andrew Left actually seems to be killing these trades in electric cars. Okay, but NIO's gross margins were negative for the year. They were actually a little bit positive, I think 0.4% in the last quarter of the year, which was an awesome quarter. They sold 8,000 cars. Their average selling price of the car was about $62,000. That's US dollars for the car. And of course, to increase that 0.4% margin, they need to sell more cars. They need to increase the volume in order to sort of reduce those fixed costs that like their factories and things like that, which contribute to the price of the car. However, as we just said, in January and February, the sales volume has dropped significantly. So let's talk about why, what that might be attributed to. Okay, so the global auto market is probably at its peak. There's about 100 million cars sold each year, and that number doesn't seem to be growing much according to analysts. Secondly, China's GDP growth has definitely slowed. I think they recently updated with some of the lowest growth rates we've seen from China in a long time. And not only that, but they're in the trade war with the United States, which has been affecting China's economy. So that's sort of macro. And also China's EV tax credits, I guess, are running out, especially at the end of last year, where a lot of the demand was pulled into 2018 and probably dried up a lot of the demand from 2019. The company also blamed the slowdown on seasonality. They actually blamed it on some holidays and like the Chinese New Year, but also I guess in the wintertime, and it is winter in parts of China, less people want to buy a car in the wintertime. Now the other thing is that Tesla has just started shipping Model 3s into China. They actually shipped about 1,600 Model 3s in a single shipment. That's about twice as much as NIO sold in all of February. So clearly there's buyers for Teslas in China, and it is a gigantic market. So something must be up with NIO specifically. Now, these Model 3 shipments are fairly recent, so they may not have affected NIO in the results that we've seen, but they might affect it going forward. And obviously, there does seem to be some Model 3 demand. Tesla probably does have quite a few pre-orders from China that they need to fulfill, plus some new orders. So Tesla does have demand, and perhaps that might put some pressure on NIO. The other thing is that Tesla is going to be unveiling their Model Y soon, which might affect people's decisions as they weigh which type of SUV they might want to purchase. So some of these things have already affected NIO's sales, and they will continue to affect NIO's sales, at least in the short term. And there's a couple things here at the bottom related to Tesla, which may start to impact NIO going forward. But they're already seeing a huge slowdown in their sales, which is a little bit concerning. So the question is, if there is a slowdown, and there seems to be one currently, can NIO sustain that, and will they be able to have enough money to keep the business going? So let's look at these three segments here that NIO has in its operations, and we'll see if the company has a bit of a spending problem. So the first one is called NIO House, and the second is NIO Power, and the third is NIO Service. Okay, so NIO House is sort of like a lifestyle. They're trying to make their brand into sort of a lifestyle brand where they offer these spaces where people can go and, I guess, chill or something. First of all, that requires a lot of real estate, so NIO must be buying or renting or something to do with real estate, which, as we've just seen with Tesla, who is basically getting out of the real estate business, this might not be the best idea for a car manufacturer. And it seems that most car manufacturers sort of outsource their actual physical dealerships and their real estate, and NIO is doing the opposite of that. They're doing what Tesla was doing, and Tesla just recently backed out of it, but NIO seems to be hasn't made that decision yet. So owning all of this real estate could be quite expensive for NIO, especially because it doesn't even seem to add to the car itself. It's completely unrelated. It's just a space where people can chill. I don't see these selling more cars. This is already exclusive for people that already own the cars. So to me, it doesn't make a lot of sense. But I understand that they are trying to become a lifestyle brand. The second thing was NIO Power. So basically, they have these like custom garages where they can actually swap the batteries of their ES8, their electric SUV. And I think that's awesome. That's really cool. That's a great idea. It makes it super fast to charge your car to full power. But the only thing is that these things, in order to construct them and put them everywhere around the city, are pretty expensive. And not only that, but once you've put them there, because they have moving parts, like the battery machine is this thing underground, and it moves and has to take the battery out of your car and put it back in. These machines themselves have so many different parts to them that they probably need quite a bit of maintenance and repair. And that's very different from just a regular charger, which is basically just a couple cables and wires and don't really need repair all the time. So this thing is going to require labor, like people coming and repairing it, parts, and it's just a whole other hassle. So I would say that's probably going to add to the costs for NIO. I believe Tesla had also tried this in California, and after they tested it out, they decided not to do it. So kind of in retrospect, it seems like Tesla's been making some pretty good decisions lately, and NIO is still moving forward with their decisions to have the NIO House and the NIO Power. Now, NIO Service, I mean, yeah, of course, the company is going to need to have service to service their cars. Of course, I mean, even Tesla has service centers all around the United States, and NIO is probably opening up service centers all across China. Here are some of the things that they offer. They offer free quality assurance, regular maintenance, I believe it's free up to 60,000 kilometers, and lifetime free roadside assistance. All of these things add to the cost for NIO, except for when the free part of the maintenance runs out, and then people will have to start paying for maintenance. But in the short term, NIO is going to lose money, and in the long term, they'll probably make money off of the maintenance. Now, the only other thing to note here is that NIO only has about 12,000 cars on the road. yet they need to start opening service centers to service those cars and to service their fleet, which is now growing at a much slower pace. So I mean, people might start to get upset if there aren't going to be a lot of service centers, just as they're getting upset in the United States when Tesla has been growing service centers like crazy, but obviously not as fast as they've been growing Model 3 sales, which have been booming dramatically. So NIO's sort of going to get stuck in the same position. The only problem is that NIO's sales have slowed, yet they still need to open service centers, which is going to cost them a lot of money that they're not really getting back because no one's going to be doing service because there's so few cars on the road. And this is also NIO's like first, I guess, mass market car. If you compare it to Tesla, Tesla already had the S and the X on the road, and they were selling about 100,000 of those cars each year. So even if Model 3 sort of ramped up slower or didn't ramp up right away, I mean, those service centers were probably still pretty useful for S and X. And you can see now that Tesla has ramped up Model 3, their service center revenue has jumped up dramatically, as well as the costs. The costs are actually higher than the revenue because Tesla says that they're not going to make money off the service centers. But the point I'm getting at is that in order for the service centers to recoup the money that they're losing when you open it, you need to sell a lot of cars. Okay, so the company's outlook is that they're going to be delivering about 3,500 to 3,800 vehicles in the first quarter of this year. That's a decrease of over half, over 56 to 52% decrease from the last quarter. So given that they made about $500 million last quarter, this quarter they aim to make between 202 and 220 million, which is also a cut in half from the previous quarter. Now, they hit a pretty big milestone in the last quarter, selling 8,000 cars and earning $500 million in US dollars in revenue. Yet they still lost $500 million. They still lost $500 million last quarter. The company only has about $1.5 billion to $2 billion on its balance sheet. So now that they're forecasting a revenue of only $200 million, like who knows what the losses will be, given that they still have pretty much all of the expenses from the last quarter. They won't have to make as many cars this quarter. Like maybe they'll have excess inventory, but they're still going to have all of their fixed costs, their service centers, all of their real estate, and everything that they need to pay for. So obviously they're going to have to slow down their spending, but who knows how much money they're going to lose this quarter, and who knows how long they can sustain that for. So I'm pretty concerned about NIO. That's not a good situation to be in when the car that's brand new, that's just coming into the industry, is already starting to slow down after just a couple months of it being released, and they don't really have anything else to fall back on. And also they need to technically continue ramping up service centers because they need to cover the country where they're selling their cars so that people can have service centers. And it seems like that might slow that down a little bit. Now, NIO calls itself, or people have been calling it, the Tesla of China. Well, first of all, anything that is the something of something isn't really the anything of anything. That's a Lisa Simpson quote. And I don't think NIO is the Tesla of China. I think that Tesla is the Tesla of China because they seem to already be selling more cars in China than NIO is. And they've only shipped their first shipment. I'm pretty worried about NIO's balance sheet. They just raised about $650 million in debt, which of course they're going to have to be paying 4.5% interest on that debt while they try to turn around or ramp up their business. So I think it's possible that NIO might actually be the Faraday future of China, but it might be too early to tell because I don't know where all the bears are in this stock. It seems like everybody's bullish on this company, even though they don't really know much about it. Most people in North America don't really know how things work in China. And their financials are a little bit opaque, and how the company is run is a little bit more opaque than the companies in the United States, which have very strict reporting policies and things like that. So we can't really see what's going on in China unless you go and visit there, and you might not get a real good picture of what's going on in the country. So it seems like like Warren Buffett has a quote where he says, "Only buy things that you understand." And it seems like if you live in North America, you probably have a better understanding of American car companies and how those work versus Chinese companies, unless you're from China and you understand how it works and you have an edge over other people. But if you don't, then then I think this stock is a little bit risky. And back to what I was saying, it seems that everybody has been bullish on this company. Nobody seems to be criticizing NIO for anything, whereas Tesla makes the slightest little mistake and everybody's all over them. So I think that actually counterintuitively will work better to Tesla's benefit and worse to NIO's benefit, because all of the bears in Tesla could get converted into bulls, whereas all of the bulls in NIO have to be converted into bears at some point. So I actually think that NIO is a dangerous stock. Be sure to ask your financial advisor if you're making any investments in this company. It has a pretty high valuation for a company that has high expectations for growth, and yet it seems that the growth has just slowed dramatically in the near term, and we don't know when that will turn itself around. So that's my take on NIO. Hope you enjoyed this video. Hopefully I helped shed some light on the company, on their financials, and some of the recent micro and macroeconomic events that have been occurring that might affect the company. So please subscribe to our YouTube channel. We would really appreciate your support, and smash that like button. Thanks for watching.